Okay, so the Nifty yesterday was down for the third straight session. There's been large FII selling in the last few days, so things are not looking good. This morning, the implied opening is up about 16 points, but I fear that maybe there could be some selling pressure given what we've seen. Our research team is here to give us a list of top 10 stocks. Let's get straight to it. Ekta is joining in first up. DRL was not a bad set of numbers, actually. Ekta, over to you.
Thanks for that. Well, yes, the reported numbers were below estimates. The revenue was up 12.5%. The street was anticipating a 17% growth. But if you adjust for the one-off of divestment of brands, it was up around 17%. We had the EBITDA margins, which were a disappointment, which came in at around 26.4%. The street was anticipating anywhere between 26 to 28%. And the other key disappointment was the US business, because the street was anticipating around $400 million on the upper end. They've come in at $391 million, and this is lower on a sequential basis. But the range was wide for the US. That's important to note. But nonetheless, the US business declined on a sequential basis. India was down 12%, but adjusted for the divestment of non-core business, it was up around 11%. Russia was down 4%. And year-on-year and 15% Q-on-Q because of the currency issues there. But nonetheless, I think the US business as well as the margins is probably going to weigh on Dr. Reddy's, though they seem to be confident in terms of the guidance going forward, such as maintaining margins of 25% going forward. But I think the US as well as the margin picture this quarter might weigh on the stock today.
Okay, all right. Thanks a lot for that, Ekta. Well, we'll also have a chat with the management at 8:35 a.m. later today, so stay tuned to that conversation. Well, let's hop across to Mangalam. He's here to tell us about Pidilite. Mangalam, how are the numbers?
Well, Pidilite, the internals were pretty strong, so the EBITDA and the net profit would tell you that maybe this below expectations, but if you look at the internals, that's telling you that the fundamentals of the business are actually improving. Revenue at 2,900 crores versus a poll of 2,800 crores is a positive. They've reported 12.7% volume growth in their consumer business. Here as well is the higher end of street expectations of 10 to 12%. Gross margins have improved by around 660 basis points year on year, and B2B business also reported a volume growth of 25%. What missed was the EBITDA, as against our expectations of 600 crores, it's 577 crores. That's largely because other expenses increased by 25%. The company is increasing expenditure on branding, and there was also an exceptional loss of about 72 crores. The management did say that rural markets outpaced urban, so that's a positive. Even as sentiment is subdued in the near term, medium term, they are positive. With overnight decline in crude prices, I see Pidilite in the green.
All right, Mangalam, thanks very much for that. JSW Energy is the next one we are focused on. The numbers came. Vivek has got details. Vivek, morning.
Good morning. JSW Energy, very few and varied consensus estimates, but the company's numbers seem to have missed them. The revenue is although higher by 3.5% on a year-on-year basis, aided by net generation of almost 26% growth on a year-on-year basis. EBITDA higher by 59%, coming in at 1,177 crore, largely aided by the new acquisitions that the company has onboarded. EBITDA margins quite strong, 42.7% versus 27.7% on a year-on-year basis. Profitability higher by 23%. Now, very surprisingly, this is something that the street didn't anticipate. The company just concluded a QIP of close to 5,000 crore in the quarter gone by. Further to that, the company has taken an enabling provision of the ability to raise up to 10,000 crore in this particular financial year itself. It's just an enabling provision as of now, but that will be something that the street would want more details on how exactly they intend to use the funds. Now, along with that, finance cost in the quarter gone by was quite high, 533 crore versus 233 crore on a year-on-year basis. The company says that higher finance cost from additional borrowings, and they say that this was taken for ongoing growth capex as well as the acquired RE portfolio required some funds. So now, Concall, they did give a hint on what exactly they intend to do with the funds. They intend to enter into WTG, that is wind turbine generation manufacturing. So that'll be quite interesting as far as JSW Energy is concerned. Capex of close to 15,000 crore is what they've earmarked for the rest of the year.
Okay, thanks a lot for that. Well, United Breweries had a decent set of numbers as well. The volume growth was almost 11%. No surprises there. Mangalam, over to you.
No surprises there, but the recovery is taking a little more time than what the street anticipated. Why do I say that? Because while volumes grew around 11%, the poll was at 10 to 12%, Heineken actually said that India beer volume is in low teens. So the street was prepped for low teens, but this time around it's coming at around 11%. Apart from that, the revenue was good, 2133 crores. The street was working with a number shy of 2,000 crores. Premium segment has been doing well. That's the case for all consumer companies. 21% volume growth in the premium segment, led by South and East regions. The street was hoping for for some market share gains in the northern part of the country as well. Strong growth came in for Kingfisher Ultra and Kingfisher Ultra Max. Importantly, gross margins, that was missing expectations. It grew just 310 basis points. The street was bracing itself for a number upwards of 600 basis points, and as a result of which both EBITDA as well as the net profit have been below expectations. The company has appointed a new CFO as well, comes in from Heineken Ethiopia. Important to know that maybe the stock opens in the red on account of EBITDA and net profit miss, but we will see recovery because it's hot and beer volumes are improving.
Indeed, Mangalam, so top line beat, margin miss out there. But let's hop across to Vamakshi. It's hot, Vamakshi, but Voltas, well, they lost some market share, it seems like.
Well, absolutely, Nigel. A weak set coming in from Voltas. When we look at the revenue, that came in nearly 10% above our poll, but nevertheless, we are seeing a miss as far as EBITDA is concerned, a 34% miss for the EBITDA. Net profit also came in nearly 52% lower as compared to the CNBC TV18 poll. Now, when we look at the revenue growth, however, it was quite upbeat, 42% higher, and this was largely driven by the UCP, that is the unitary cooling products portfolio, which grew by almost 44%. And the EMP, which is the electromechanical projects, that also saw a strong growth of almost 47%. But it was a big miss as far as the margins are concerned. EBITDA margin was down by almost 284 basis points. It has contracted sharply from 7.4% to 4.5%. And this is largely being driven by losses from the EMP business. They remain elevated, mainly on account of provisions that they had to take in the international business. EBIT margin of even the UCP business this time around, despite the higher growth in volumes, has declined by almost 90 basis points. So this is also driving the margins lower. Resultantly, EBITDA was down nearly 12.6% and net profit has seen a downtick of almost 23%. The key negatives this time around was, like you rightly pointed out, the market share decline in the RAC segment at 18.7% as compared to 19% seen in December. International project business also continues to face headwinds. So overall, it's looking like a weak set for Voltas and expect the stock to open lower today.
Okay, well, lots of competition in the room air conditioning segment. Vamakshi, thank you very much for that. Well, PB Fintech is the next one we are focused on. Yash has got details of the numbers here. Yash, morning.
Morning, Prashant. So, of course, three important things when it comes to PB Fintech. It was a strong fourth quarter for the company and it was aided largely by its core online performance. Also, the next thing to look out for when it comes to the new initiative business is that it has achieved contribution break-even when it comes to that business. And the third important takeaway is that it's turned net profit on the bottom line level at 60 crore rupees versus loss of about 9 crore rupees. Now, if one talks about the numbers, the overall revenue was up 25%, contribution was up 40%, contribution margins up 285 basis points. Adjusted EBITDA, that figure was up 1.5 times. Adjusted EBITDA margins up about 311 basis points. As I said, this is the overall numbers. It was aided strongly by its core online business, but the strong numbers will have to be looked at in context of what the stock has done. It is doubled in the last 1 year. It is up about 40% just in the last 3 months.
Okay, fair enough. Thanks for putting that into perspective for us. So strong numbers, but the stock has also rallied quite a bit. But IGL is the other one we're looking at. Sonal is here to give us the lowdown. Sonal, how did it look?
Well, mixed set. Volumes beat, but margins were under pressure. So let me take you through the numbers first. On a quarter-on-quarter basis, revenues are up 1.2%, but EBITDA declined 6% sequentially, and margins accordingly came in lower than the poll as well at 14.5%. The profits declined by 2.2%, and as I said, EBITDA was lower. So EBITDA per unit at 6.5 rupees per SCM is at a 4-quarter low. Volumes, they are at a multi-quarter high of 8.73 MMSCMD, better than estimates as well. But remember, they are 3% lower than the guided number by the management of 9 MMSCMD, and that is something that the street would not like. Jeffrey says that the volume growth was sub 5%, and full impact of 2.5 kg rupees a price cut in the CNG segment will be seen from first quarter of FY25. They are seeing some pressure in near-term profitability because they've not been able to meet their volume guidance as well, and that's why going with red on the stock today.
Okay, all right. Thanks for that, Sonal. Well, let's hop across to Yash. He's here bright and early to tell us about Max Financial. Yash, go ahead.
Good morning, Nigel. So, as far as this quarter is concerned, it was all about increasing or growing your annualized premium equivalent, and B, somehow locking that margin contraction which was coming through. Now, if we speak about Max, it's done decently well when it comes to growing its APE, and to a great extent, it sort of restricted its premium contraction also. As far as numbers are concerned, the gross written premium grew by 17%. The total annualized premium equivalent or total AP, the number that we're looking at, that grew at 13%. When we compare it to the estimates that we had, it was a beat of about 122 crore there as well. Retail AP, that grew at 6%. It was in line with the estimates that we had. Value of new business growing at 7%. And now let's come to the second important number, that is how did the company lock its margin contraction. The margin contraction was just about 173 basis points. This is much lower than what other players have done in this particular quarter. And it's largely come because of the growth in the ULIP portfolio and the shift away from the non-par segment. If one looks at the stock, it is up about 51% in the last 1 year, 4% in the last 3 months, but it's down about 4% in the last 1 month itself.
All right, Yash, thanks very much for that. Naveen Fluorine is in focus after numbers. Sonal is here with details. Sonal, a little subdued?
Well, yes. If we talk about the YY numbers, yes, they were subdued, but we did see sequential recovery. Revenues were down 14% on a YY basis. EBITDA down 45%. Margins came in at 18.3% versus 29%. Profits were down 48% as well. But sequential recovery is something that was positive because revenues, EBITDA, margins and profits, all of them were higher. But if we talk about the segment, CDMO segment, that continues to be under pressure. The revenues there were down 76% on a YY basis. What the street would not like, there is still no clarity on the new CEO, and that is something that all of them are waiting for because the stock has been underperforming on the back of this. Jeffrey says that visibility on growth remains clouded, with management hopeful of a recovery only in the second half. They've not given any guidance for FY25 in terms of growth. They have a hold with the target price of 3,070. MK has cut their FY25-26 estimates by 12 and 4% to factor in relatively subdued first half of FY25. So going with red on Naveen today.
Okay, thanks a lot for that, Sonal. Well, let's wind this down with Vivek on IRB Infra. Vivek.
Well, that's right. So IRB Infra, it was a very eventful year as far as IRB was concerned. A lot of deals happening even in the private InvIT. As far as Q4 was concerned, steady quarter, largely in line. Revenues higher by almost 27% on a year-on-year basis. EBITDA coming in at close to 890 crore, up 17% on a year-on-year basis. Margins, subdued on a year-on-year basis, 43.2 versus 46.8%. Profitability higher by 45%. Now, when you're talking about the segmental revenue from the BOT and the TOT projects is something that is ended higher by almost 18.6%. Construction revenues up 31.5%. When you're talking about the toll growth for the company as well, along with its private InvIT, that saw a 24% year-on-year growth. Now, as far as FY25 is concerned, there has been some moderation in what the company expects to grow. So what the company is saying is that more promising FY25 with growth momentum continuing in the coming year. Order book at the end of March 2024 is that 34,800 crore, which the company says gives an executable order book of close to 8,000 crore over the next 2 years. Now, CLSA maintains its buy stance on the company. They say that going forward from FY25 to FY27, the company should fire on both cylinders, both of toll traffic as well as a pickup in EPC infra.
Okay, thanks a lot for that. So here's a quick recap of our top stocks with positive news flow. Pidilite, PB Fintech, Max Financial, IRB Infra, while stocks with negative news flow, Dr. Reddy's, JSW Energy, United Breweries, Voltas, IGL and Naveen Fluorine. We'll take a short break. Up next, Devin Choksi, the MD of DR Choksi Finserv, will be joining in for some fundamental stock analysis. Stay tuned.